In Investing 101, Ben Connard, the Principal Director and Portfolio Manager at Carnegie Investment Counsel, is with us to talk Visa. Ben, the President signed the Genius Act. It sets up regulations on stablecoins. Some people fear stablecoins could give stiff competition to credit card companies, including Visa. Do you agree?
We don't think that's necessarily the case. We think, one, Visa and MasterCard, they operate the rails of the financial system. They enable money to get from one party to the other, and that's still needed with stable coins. So they're still part of that market. And then stable coins, they're great in certain markets where the currency is really volatile. A stable coin gives you the option of converting your volatile currency into a stable coin, or generally the US dollar. And your stablecoin is backed by the US dollar. And then they also offer simplified sort of international transaction. They cut down on some of the fees. That is part of Visa's business, but a lot of Visa's business is consumers swiping their debit and credit cards in the US here. We have a stable currency. We don't need to use stable coins. And we're not always doing international transactions. So we think Visa is going to hold up well, even as stablecoin continues to grow. So the recent pullback in the stock is a buying opportunity.
How is the dividend in Visa?
Visa pays a small dividend. Really, Visa still, it's about top line growth. It's about consumers continuing to swipe their card. And it's about their other services out there. They call their value-added services. They offer risk and identity solutions, buy now, pay later solutions, all those sort of other services beyond just swiping cards. That part of their revenue is growing, in the high teens, and that's becoming a bigger and bigger part of them. And so that can drive top-line growth in the high single digits, low double digits, which will ultimately be where you get the return on your stock.
Thank you for helping us out with Investing 101, Ben.
Yep, thank you.